The number one question we're getting right now on the channel is, are markets overbought? Well, as it turns out, the bullish percent index and dark pool liquidity continue to say that that may be the case. And as markets synchronize across the board with many big points and stocks being reached over the last 24 hours, we need to talk about the sudden weakness that we're getting in the small caps after the 50 basis point cut from the Federal Reserve. Also, where do the next big opportunities lie? Are they gold, metals, or of course, could it be the international markets? Well, they steamed up over the last week and we were of course along for the ride. Join us as we talk about why all of this is happening and some very interesting data that might blow your mind. See you on the other side. Well, welcome back everybody to the Daily Show where we talk about markets around the world. My name's Tom and we have some really extraordinary stuff to go through today. But first up, an indicator that we used back in 2023. It's back again, and that is the bullish percent index, a favorite of many people on the channel. Well, guess where we're at again? First time getting really above that 75 this year. Now, if you know bullish percent index, you'll know that when you get above these levels, you've got to start being a little bit more cautious in the bull run. In fact, if markets then turn back below the 70, that can be a good signal that you're going to a bit of a deeper pullback. Not an exceptionally deep pullback, maybe in the vicinity of 5% or so, but this is something that we've had before. It alerted us to, of course, the sell during the August into October period of 2023, and it also gave us those strong buy thrust signals when it comes to finding those lows and the bottoms. So could we be seeing it again? Well, we certainly could, and we've got more on that coming up as we go through the options flow a little bit soon. But let's talk now Chinese stocks, because this has been the talk of the town, and we've been discussing it now for around 3 weeks in terms of structural replication lows. And yeah, this is a huge reason why we've seen such an aggressive move. Yes, the PBOC came out and of course they gave a whole bunch of stimulation to the economy. It's clear to me, and I think it's clear to a lot of people out there, that Z is getting restless with where the Chinese economy is moving to. They're not going to hit their 5% GDP targets, and it looks like they could be pushing a little bit back into the old, let's do some property building kind of thing, because they've been trying to transition away from that being a huge part of the economy. I don't think it's working as fast as they want. So this could be a massive turning point for Chinese stocks. And we've seen dark pool activity, which we've been reporting on, absolutely finding these bases ahead of this particular data as well. Now notice here, whenever we get these monstrous short squeeze levels, they've begun successful longer term bull runs. In fact, bull runs that have lasted sometimes multiple years. Now, we first saw this at the beginning of 2024. Obviously, we were on that run, and then we've seen it again to a greater degree just recently. And what this has done is very similar to last time. It's created this massive squeeze event. Now, what's likely to happen here is we probably will find some form of consolidation soon, and then we'll go on another leg as people forget about what's just occurring. But don't lose sight of the fact that this is a short squeeze. People are caught off guard, and liquidity is starting to improve within China. In fact, here from cross-border capital, you can see the PBOC liquidity operations are starting to realistically get back up there, which shows you that yes, China means business and they are trying to change what's going on in the economy. Now, you may believe in them or not. Ultimately, it comes down to the price action. Let's talk the American market though and go through some data stats here. First up, I think it's really interesting to see that the S&P 500 has now done a very similar thing from 1998 all the way to 2000s. From 2022 lows to 2024, we've actually got around the same percentage in terms of these periods in time. Now, during these periods, this is basically asking the question of whether we're in a bubble or not. You'll notice that back in the tech boom anyway, we saw that the NASDAQ did some crazy percentages in comparison to the S&P, and the small caps did even crazier percentages. Generally speaking, whenever you're looking at some type of bubble or you're looking at the end of a successful bull market run, you usually have to see FOMO. And what this is suggesting is that maybe we've seen more of a broader market recovery, but not in the small caps that make no money. Remember, the thing about small cap tech companies is at least 36% of the Russell 2000 in particular makes no money. So will they do better off a 50 basis point cut? Well, that's of course arguable, and Tom Lee's fund strat believes they will. However, when we're looking at this means that we haven't had that final thrust of the bubble that you would usually expect if we were going into absolute obscene times. Now, another interesting factor will also be is whether tech can start to lead again. In fact, the NASDAQ 100 versus the S&P 500 100-day trailing relative returns is showing that we are now one standard deviation away. So this basically means that the S&P 500 is now improving at a faster rate than the NASDAQ itself, and it's become the leader. Now, that's not normal, of course, in a lot of the most recent big runs that we've had. In 2001 in particular, or 2021, we had a huge move, of course, in the big tech companies. Then back in the thrust of the early 2024, when AI was the big thing and everyone was talking about Nvidia, we saw a massive thrust and lead from big tech. It makes sense to slow down at that point, but we're now getting into some areas of interest. If we go down to 2 standard deviations, and we'll update the chart if that ever does happen, these can be very good periods to start looking for tech stocks. Now, 1 standard deviation is already not bad, but things could be getting more volatile into October. You'll hear a lot of people talk about this. We all know that October is the technically worst month of the year when it comes to stocks. It's also often the volatility peak. It won't be the volatility peak, I think. We'll see about it. But anyway, in 2024, because that was most likely August. But one thing's clear is you usually do see a spike in vol. And if we're going to see a spike in volatility, have a look at this chart here. This will actually show you each day and where the VIX is, or where the vol is setting up ahead of each one of the events. Now, you'll notice, of course, election day has the most amount of volatility on it, but there's also things like NFP, and then, of course, we've got some other setups here throughout the month of October. We're currently in a low volatility week. So this is considered low volatility because the macro data that's coming out is not that significant. Now, once you get into the next week, when we start NFP and we start October, that's where the macro begins to really push through. So will we get a sell in October? It's probably likely we'll get a bit of volatility, and therefore we'll have some up, down, all arounds, which is great for the day traders and scalpers out there. But it also could be good for people that are trying to position into the market. If you're a believer that we're not going into a recession yet, which I guess at this stage we're seeing the signs of no recession kind of concepts for the time being. Obviously, we still think we're in late cycle and ultimately we'll end up in a recession, but that could be still a year away, maybe even a year and a half away. That means that we need to be thinking at what might perform. Now, you hear a lot about small caps performing. Of course, price action will show us that. At the moment, price action's been terrible for small caps. They hit the resistance, they've come down. We'll look at that soon. But actually, if we go into a non-recession, so no recession standpoint, did you know that large caps should still outperform? Yes, that's actually very interesting here. Large caps, no recession. Yes, it's a bit of a blurry chart here. Will actually outperform small caps in the no recession technically on this point when we're talking about the cycle. Now, this is always 12 months after the first Fed cut in past easing cycles since the 1970s. So this will be a factor here. Will small caps do well? At some points, they may do exceptionally well. And this is why it's going to be worthwhile following the price action, but keeping in mind that everything should be a rising tide across the board, and there will be a lot of sector rotation and opportunities over the next 12 months. Let's talk about new all-time high gaps. Again, for the bulls, you've got to like what you saw coming off the Federal Reserve's action. Now, a lot of people are still asking the question, why are you not terrified by the 50 basis points anymore? One of the reasons is always to do with the price action and the market structure. I've got 7 reasons usually that I go through for big crash busts, and I don't have enough big red warning flags coming along with the 50 basis points. That's one of the signs. The other one is that the market went from being quite negative in terms of structure to positive ahead of the event, and then came out of the gates relatively strong. Now, when we look at the data from this and we think about a gap up in the magnitude that we just got at all-time highs, as you can see here, Optima's data is very bullish for the next 3 months. And it's actually got a 100% track record. So whatever volatility might come through here, there are some decent stats showing that the bulls are still in command of this market, even if we get vol. The other thing here is also FINRA margin debt. We've seen margin debt actually drop over August during that kind of freak out in the markets. And that's, again, not on those really high-end sides that I would expect with a bubble. So we don't have the Russell 2000 doing ballistic numbers like it did from 98 to 2000, the late cycle of that bubble. We We don't have the NASDAQ doing ballistic numbers yet. Could we see unrealistic, absolute craziness? Well, yes. Why do we answer that? Because in 2021, not that many years ago, you've got to remember, people were buying companies that made no money, that were probably never going to make any money, on the proviso that sometime over the next 20 years, they would probably make some money. That's actually where we were only a few years ago. And everyone took that as, oh, it's okay, these companies are all great. Now we see them, they're in the dirt. Obviously, if you look at RK on the fund side, you will actually see pretty much the ramifications of those particular stocks. They're starting to wake up, though, in recent weeks. And since the FOMC meeting in particular, we have started to see some nice runs in crappy laggards. So we'll be continuing to follow that, because one of the stocks that we talked about on the Monday stream, which was Intel, starting to pick back up, guess what? It's been one of the best performers this week, along with Micron as well, which did amazingly after hours. Congratulations to anyone that's been in those ones from our Monday stream. Exhibit 3 here, percentage of S&P 500 stocks outperforming on pace to the best since 2002. Now, this is again not a bad sign. It shows the breadth is there. It shows that generally the market is looking relatively good. So that brings us to the point of, will we see vol in October? Well, we know that the stats say yes. We know that this is the worst time, and that generally when we get the sentiment reports, I would say that greed is relatively high. Now, if greed is really high, that will be another warning sign about temporary weakness. And we've talked about this because, of course, we know the dark pool and large activity coming into the end of the quarter, maybe it's window dressing, maybe it's just OPEX, is starting to really accelerate. We'll look at that in a moment. Now we've got here the two types of structure, recession and non-recession structures. We talk about it all the time. Take a pause here on the video if you want to check out those particular structures. But we do know that the market will probably make a strong decision about whether it believes a recession is coming over the next 1 to 3 months. Watch the channel, subscribe, we'll be following it together. Let's now take a look at semiconductors. They hit into the highs. Obviously, they've floundered around this level a little bit in recent days. Q's also seeing some massive trades around these highs. Again, we've talked about this. The SPY seeing some massive trades around these highs. And also, we had Chinese stocks already going in. Remember, this was the early part of September. Baba, JD, HSI, everything was showing massive transactions. KWeb. So people knew that this was coming. And again, it just shows you the power of some of these large transactions. Another one as well, if you watch our last video, we talked about Visa having this unusual large trade on it along with JP Morgan. Well, guess what happened the next day? Visa got investigated. It sued, I think. So literally, these big transactions can matter a lot. We've also got IVV here, which is the S&P 500 ETF core. That's starting to show some large transactions. And Micron just the other day found the second largest transaction in the last 2 years. Then suddenly we get decent price action turn. We obviously get what we call a replicable breakout strategy off the lows, which is something that's in one of our courses. It's quite a good technique. And yeah, maybe you got lucky after hours in terms of the overall earnings. But I like to think of it as it's a little bit more than luck. It's putting together the pieces of the puzzle. And remember, when it comes to trading and investing, you're building a confluent story. Not one data point should ever lead you into believing a crash is happening or something is going to be successful. And that's, of course, where we go back to that 50 basis points. Yeah, it looks weird, but when you consider everything, you consider the market structure, then you can, and you also know your cycle timings, then you can start to really, put the pieces of the puzzle together. Let's have a look here. Utilities was one of the best in the last 24 hours, one of our favorite sectors. Gold also doing well, which is nice to see. And semi started to have a little bit of a comeback, mostly led by Nvidia, actually filling into the gap, which we'll look at in a moment. Metals, though, were the story of the last couple of days, and we've been watching these metals very closely. We've already been on the copper bandwagon. We've talked about iron ore. We've talked about some of the iron ore stocks as well. These things have all shown price action before we found out about the PBOC stuff, before we saw that massive squeeze. Again, price action leads in these cases. Some things to definitely keep on the back burner in terms of your mind. KRE, regional banks showing some weakness. Also home builders, not the best to see them down there, so some types of warnings. And speaking of warnings, we continue to be in the possibility of an island reversal. Now you may say, and I see a lot of people saying this, oh, the markets are ramping, they're ramping. Look, this is a very small melt up, all in the vicinity of the possibility of getting a gap down off some news event. Maybe that's going to be non-farm payrolls next week. Who knows? We sat around here for a while and ended up forming a little bit of a Wyckoff top here before falling off. So again, this is what we call a pit at the moment, a pullback in time. That is actually wasting time, which is in itself a pullback. And as I've kind of thought about this, if you were to have a go at this market and you felt like, oh, I've got to be short or something, make your own decisions, of course, guys, then it would have to be one of those ones where you don't have a signal yet. You're going to have to just say, yes, I've got a lot of overbought indicators, but I'd maybe have to use an option strategy of some kind. If the markets do fall off, where will they go to in the first levels? 56.06 to 56.20 seems like the most logical first kind of where buyers will sit. And the second one is probably going to be between 5,400 and 5,500. And we can kind of look at that from the options level. First up though, options high and lows for today. These are the zones. And you can actually probably put the day trade behind the last low of the last 24 hours. So here's the last low. You notice this tweezer technique currently making a squeezing off these higher highs in the melt up. It's what we call a dull market. Usually you don't want to short that with any type of CFD or future because it's quite dangerous to do so. But if it starts to break the structure, then that can lead, of course, to fairly decent moves to the 5600s. Let's see if the options market agrees with that, though. Well, we know that we're consistently in this positive gamma, this 5700 to 5750. There's all these call levels all over it. Well, the next 24 hours, 5720 is the level. So basically this zone here, super important, 5720. We get through that from the session and we're starting at the moment in the futures a little bit above it. We could push to 5750. Why do we know it's 5750? Because we can see it over here on the right hand side. When we look at the Friday trade, that seems to be where the big trades are. And we also know next week it's 5760. So there's all these strange calls sitting here, massive call levels. And if the markets are able to breach through those, then they can kind of feed upon themselves and slowly push up. We've seen this time and time again, specifically even with Tesla at the moment, where it's been pushing that positive gamma story, which led us into believing that it would run to 250 and maybe now even 270 and 280. NASDAQ CTAs and CTAs in general are starting to join the crowd in terms of momentum. So that's a good sign if you're feeling really bullish and you want to keep kind of in this little melt up here in the day trades. But specifically, I think it's a time where you have to come from the abundance mindset. There are lots of crappy stocks that have been beaten down that are showing much better recoveries, whereas a lot of the stocks that have been running for a while, those ones are kind of all at resistances or overbought signals. Let's take a look at Tesla. It's pushing into 260, which is, of course, now this week's main call wall. So that's something to watch out for. We're pretty much on the resistance for this week. But if we continue through 270 and 280, and of course 280 will absolutely complete, what have we been talking about? The inverse head and shoulders. So for now, I wouldn't go against Tesla. It just basically looks like it's in positive gamma and people are jumping into it, probably ahead of the October event. Remember, we have an October event, then we've got earnings. So I would say the October event is what the market's trying to run into here. Buy the rumor. Could it be sell the fact? I'll let you guys decide in the comments down below. Let's move over now to Nvidia, which of course is moving up here in the call wall. So the call wall went from 120 to 125, which is exactly where you've got that gap fill. So Nvidia are actually finding some options life. The second most owned stock, or maybe even sometimes the first most owned stock by retail traders like you and I now. So that's a big change. It was only 5 to 6% of most retail traders' portfolios. Now, due to market cap sizing and a few other things, it's sitting well over 10. I posted the data over on our X account for that. So just before we jump into the charts and we take a look at all of the key levels that we need to be watching right now, I want to remind the viewers out there, especially you guys from Australia, about the sponsor of today's video, which is Tiger Brokers. Now, one of the things that they've been doing for a little while now is offering a pretty significant fixed rate in an account. Now, basically, if you're interested in taking advantage of that, I'm being told that I believe it ends like the 29th of September. So if you're from Australia and you're interested in taking that one on board, along with some of the other extra little specials that I've got you guys, you know, you get a little bit of Tesla here, which is pretty sweet, then you can check them out in the links in the description down below. But some of the other reasons we like Tiger Brokers is, number one, they're winning awards. Why? Because they're actually improving their platform. We talked in that previous video about how they've actually now got some great stuff for earnings season. So specifically, they've got some AI, they've got cheap rates in terms of Australia to overseas. And one of the most important things with earnings season coming up is not just the forward EPS and the forward PEs that they're offering the platform, but it's also trading stocks 24/5. Now, this actually has gone up since the last time I even looked at it. They're adding more stocks each day. That's awesome. So I like to see that because for too long, it's been very difficult to trade into America from Australian point of view. Now it's easy. Check out Tiger Brokers, links in the description. Thanks so much to them for sponsoring today's video. All right, let's move over now to the markets. And I just want to talk Visa here for a moment because, of course, this was the classic. We see this monstrous trade come through and then all of a sudden, oh, wow, we've got some news. And that's why some of the things that we put through here, the options flows, and of course the dark pools. Don't trade what they say, trade what they're doing. And we saw massive transactions in the OPEX. We saw massive, big position here. And then all of a sudden the next day, boom, down we go. And that's actually not, a little bit. That's actually 6+%, almost 7%, which on a company like Visa is quite a lot. So it basically looks like a double top when you're considering it from the resistance side, but it just shows you time and time again why you've got to pay attention to these things along with the technicals. Now, speaking of paying attention, let's have a quick look at the regional banking. It continues to find resistance. And because this is the biggest part of Russell 2000, you got to mark out this zone up here. In fact, let's do it together. What we're going to do is we're going to mark out a high up here for the future. We're just going to add a little alert there. And if that happens and we get nice closures above there, guess what? That's going to be significant for which particular position? Well, of course, it's going to be the US 2K. And I'll just bring the US 2K in here right now. We usually do it a little bit later in today's video, but generally speaking, we know there's a resistance here. So if we break through 22 kind of 80 close strong here, then that's going to create that momentum, that catch-up momentum that we might be looking for 24.38. So I just want to reiterate that because it's such a big zone. That's a 7 and a bit% zone in the future that could happen. For now, though, this is at resistance, and as you'll find out in a moment, we're at resistance in quite a lot of pairs. Now, for the dollar traders out there, if you broke even the trade from the other day, then you'd be a little sad because it's back up above the important line. I've got to say, yeah, I did break even this trade. So I got hit out here at a break even. Excellent entries, of course. But guess what? That low held. Now, that's important because as I think this will probably come into non-farm payrolls, it actually blitzed back up. And at the moment, it's trying to change trend to the upside. This is such an important level for the dollar. That was a strong kind of buy up here. You can see the anchored VWAP and it's sitting on that in terms of closures. But it's the daily 20 that we'll be paying attention to. If the daily 20 is taken above, then we can start to talk back about 101.50. That will show strength. For now, the dollar is still technically in a downward trend, very small time frames. It's trying to find that bullish move. And for some day traders, that's an interesting point. If you held through that low, cool for you. I gotta say, I got that one on the break even though. Let's move over to copper. Nice. It's beautiful stuff, guys. I really like this. So 450, 460, I'll give you a clap. Because, and you know why we're all getting a clap for this? Because no one else was talking about it. You know what I saw in my inbox over the last 48 hours? Copper, metals, China, copper, metals, China. So again, it's not that they're now talking about it because it's the news. Guess what? The price action showed us before it. This is a beautiful thing. I still get excited about this type of stuff, even doing it 17 years later. And the reason why is because it's replicable. There are great setups here. And these are the types of things. You don't have the emotion. You don't fall into the narratives. It would have been very easy to be short in here and then saying, oh, copper's dead and all of this other stuff. But there were signs of recovery in it. Now, of course, it's at resistance now. So the particular metal that I'm watching most closely is actually iron ore. And this will tell us a little bit about whether we're really moving forward in China, because that will prove that realistically there is front loading on iron ore, and that is probably China saying, oh, quickly, get the old economy started up, guys. We've got to get this going. So yeah, very interesting downward channel here on iron ore, and obviously signs of life in that. Speaking of signs of life, gold is now pretty overbought, but still love it, obviously. Overall, I don't think it's a great entry up here, though, at 26.61. Of course, our general thought process that we've held for a long time now, since 1800, of 3,000 an ounce. it's coming. Look at it go. So a lot of you are pretty happy with gold and the moves. I do think it's a bit overbought. There's probably going to be some pullbacks. These are some levels to watch. I've got a couple of little zones here. And you'll notice I just left that gold TP zone number 1 on, just so you can see that's what actually I would have done if I was day trading into a zone. So yes, it's gone higher, and you say, oh, stupid Tom, why would you take it off early? You don't go broke taking your profit. Some people hate that one, but ultimately you've got to stick to your systems. That's all really matters. So in this case, of course, the long holding of gold looks very, very nice. And if you look at something like GDX, which is of course the gold miners here, you can see that they've continued to strengthen as well. And they're still quite behind gold price at this stage. Silver is at the next level of resistance. I'm waiting for the weekly close here, but silver cleaned 31.50, which is of course a great sign. And that could push the silver squeeze upwards of 34.60. These metals have started to really move, and it's been great to explore that with you because, again, the comment section, a few of you guys, oh, you hated silver. I don't blame you. I know the narrative's out there, but you hated it. You hated it. And I've got to say, I looked at that and I went, nice. Because people hate it so much. There are times to hate silver. Lost decade, anyone? There was the worst for ages. There are times to also like it. So, of course, momentum is on the side at the moment for that. Now, little crappy here with the old oil. The oil has struggled to make break through 72.40. Now, it did come back down. You can see here it closed around that level I've got here, the green line. But I don't know. I think it's still probably going to, even if it pulls back a bit more, it's still got that little bit of bullish momentum behind it. I do like the fact that it cracked the daily 20. I also think that there's still buyers that could be present, maybe anywhere from 68 to 69 a barrel, and that could push into the 74. I would like to see a 74 test over the next coming weeks. So we'll see whether that can happen. This is a very political commodity, so I would be ultra careful with your positions on something like oil. Now, for the Tesla fangirls and fanboys out there, you guys would be loving it because, yeah, you'd be loving it because there's positive gamma. And the market continues to go through. It smashed the call wall of 250. That got obliterated. Now we're going to 260. Obviously, it opens up the potential of 280. At this point, the only real level I can think about over the next 24 hours is maybe in this 264 kind of level. Maybe Tesla will just ram into that zone. You've got to love what you're seeing here, though. And, of course, if you start pushing it out, this could be a significant weekly close for it as well. Some people have even sent me things where they like, look at the left, look at the head, look at the right shoulder. Tom, if we clear 280, we're going to the moon, baby. Maybe you are going to the moon. I don't know where exactly Tesla's going to go. I don't look at this fundamentally, personally. I just look at it as a flow. And I always know the great thing about Tesla is it's kind of like China stocks. When everyone starts to ramp on them, they go ballistic. Why? Because everyone buys calls and it feeds upon itself. So that's kind of nice. Talking of calls, Nvidia 120 cracked. Now we're moving into that gap fill zone, which is in here. It still technically didn't fill. Some people say it will because it's week to week. But yeah, I'm thinking 128 is possible here for Nvidia at this stage. Certainly an uptick. A lot of people have asked me, do I like it still from a bull run? Well, yeah, I do, because I think it's a big part of the current bubble that we're in. So I think Nvidia needs to crack new all-time highs ultimately. And this will be a huge occasion if it gets through 132. Of course, we loved it down here at 106. I loved it even more at 90. Of course, we did the streams about that. But at the moment, things are improving. They're moving forward. If we do get a pullback based on the overboughtness maybe of the S&P, then of course Nvidia will come down as well. But at the moment, the momentum is certainly in the bull favor. Let's move over to HSI, big resistance. Wow, quick move. That's why you got to be early on these Chinese stocks if you're going to make money from them. So many days up, so much bull action, so many replications in here, all sorts of crazy replications, all sorts of crazy ratios too, which is very nice. But we have hit the resistance, the first big resistance before 20K. I think it'll blitz 20K if it consolidates. My favored position here would be for it to consolidate a bit and then to bounce through. That would be nice to see that. But this could mark, as we saw before, a big changing point for Chinese stocks. And people are getting excited about them before. I always say I don't like it when everyone's excited about them because we've seen many ramps before, but you notice how rampy it can get. Here's the ramp earlier in the year. Here's the second one. This isn't even close to the percentages they can go. We have smashed that first resistance though. So congratulations to people that were in that. Again, if you're feeling FOMO, there's no FOMO in this world, guys. There's just abundance. There's always another opportunity. I'll just put in a very strange stock here, which is, of course, Intel, and just show you again, Micron or Intel, very hated. But as we said in the live stream, we were liking this on the Monday. When the Monday opened into the live stream, I was like, oh, wow, that thing's actually activating a bit of a bull buy. So far, it's up. I don't even know. What's it up in percentage? So we'll go here percentage-wise, 4.88%. Nothing to sneeze at. Is it the greatest stock in the world? No, but it's another one of those replication setups. And it was similar to, of course, Micron, which got lucky due to the earnings. And that's trading now back at the 108 level, which, of course, is a resistance zone. So smash it straight into the resistance zone straight after the earnings, and you can see the big volumes coming through. A lot of people actually on this one, I will say, throughout X and probably YouTube. So a lot of bottom pickers there. Aussie 200 traders probably can't hate the market at the moment. If there is a pickup in iron ore, you will like what you're seeing. So at the moment, it's still holding a series of higher highs and higher lows, which is awesome. US 30, of course, yes, showing signs of, I would say, weakness, like, at least consolidation, pullback in time. I'd be a little bit cautious here over the next couple of weeks in terms of the major indices. And I've said that for basically 4 days, and guess what? Nothing's happened except for underneath the hood. So yeah, it's the same thing. US 2K, we know our levels. We've discussed them before. NASDAQ. Now, NASDAQ's actually ramping here a little bit, and this brings up that really cool drawing that we had, which was basically this playing out potentially through October. I love that. That would be cool. So we'll see whether we can do that. Maybe even, based on this, if this closes weekly, is it possible that we could go second major res before seeing a pullback, and it could be led just by semis, Nvidia getting to that next level and everything else. So this certainly is breaking to the upside. There's no doubt that it's, if you were looking at statistics, you would think that 20,400 would be the next level for it. And it's a little bit different to the S&P. So we'll see whether the melt up continues. Of course, you've got to be ultra cautious, I feel. Bitcoin. This one, we're bringing some stats. We'll bring some fire over the weekend video for this one, guys. Bitcoin, though, let's just say if it cleans September bullish, could get kind of nice for it. I'm excited about crypto for the first time in a while. So let's see. Well, been excited about it for about a month, but we'll find out whether we can get a bit of Bitcoin action. 64.5 needs to clear. If it does, then of course 68. And if you get through 68, well, that changes everything. And remember the giant cup and handle we had in the last video. Go check that out, guys. In terms of news, well, guess who's coming to town? Well, it's FOMC members to absolute bore you. If you want to watch FOMC members for approximately 8+ hours of the next day, you can do so with all of our favorites, such as Medma Collins, Kugler, Bowman, Powell. We love Powell. And then, of course, we've got Williams. We've even got the ECB coming out. So I don't know what this is. It's disgusting. It's a day of boredom where they talk about all of the tools. I don't really know what it's going to do to the markets. Of course, none of us do. But in general, that's a lot of FOMC members. So stay tuned for that one, I guess. And then, of course, we get the core PCE coming out on Friday, which is one of the kind of lead indicators they often use. If you enjoyed today's video, guys, make sure to subscribe. Of course, check out the links in the description down below. Sign up to the free weekly newsletter. Got one of those coming out just into next week, so that'll be awesome. And of course, if you're in Sydney as well, sign up now. The spots are starting to fill for that one, and Melbourne is pretty much done. So you've just got to kind of get in right now. That one's basically over. Thanks so much for watching, guys. You have a fantastic day. And remember as well to check out the sponsor of today's video, which is Tiger Brokers. And also links in the description down below if you're from Australia and you want to look at their 7% per annum for 150 days offer. Of course, check out the T's and C's. I think that's ending very soon, so you've got to get in before it all ends if you want to do that. Bye for now.